Welcome back to Face, Jim.
Oh, hey Dale, how are you?
Yeah, good to see you. You got some responses on X about talking about dispersion. A couple of people that's their thing. So and you always take the time and effort that we appreciate to come in with a presentation because I guess it's difficult just to talk about the VIX. Which has been, pretty much in the same pattern of moving sideways for what, a decade now. Um, thanks
Sometimes
very
it
much for
feels that
being
way.
here.
Can you see
Yeah,
my slides?
got it. Still
Okay,
no
cool.
fear here.
You
And,
know,
and go ahead. And you're the company that you're with now, Balastrock, so people can, you know,
and
check
my
it
and
out.
my email address there, and on as Dale pointed out on Twitter X, I am at Vixologist. That's probably the
Okay.
easiest way to follow me.
So,
Yeah, so
what does Balastrock do? They only deal with credited investors or everyone?
yeah, we are a boutique focused on high net worth investors, so
Okay.
accredited, qualified,
Okay.
that kind of folk.
Right.
Um, and we do, we cover both public markets and so-called alternative investments or private markets, private credit, private equity, venture capital, all that good stuff.
Okay.
So, we think we're building better diversification into client portfolios. And that's the
Well,
commercial.
they have you there, so definitely you're going to, be able to turn their heads towards something if the VIX is giving you messages that it,
I'm certainly going to try. We have yes, we have a plan for that.
before we get started, are there any signs, we're wrapping up the second quarter, that the
Hmm.
second half of the year will not be as restrained with volatility?
You know, I'll show some things in the slides.
Okay.
Right now, the answer is no.
Okay.
So why don't we walk through this,
Okay.
and you will stop and ask questions whenever you feel like it.
Okay. Let it roll, Jim.
So 2023 was the year of no fear in equity markets, and so far this year, we're still showing no fear. We haven't had the VIX close above 20, in almost it's we're almost 6 months in, got a few days left, and VIX has not closed over 20. S&P has not had a 2% down day.
Amazing.
We'll get to dispersion and correlation a bit later, but equity correlations are in the gutter. I'm seeing echoes of 2017, which was the record low for volatility in history. And I'll show you where I'm seeing that. And meanwhile, I think it's important. You guys were talking about TLT and bonds. We're still seeing bond market volatility kind of more elevated than equity volatility.
Okay.
Okay, so the VIX, this is going back to COVID, and what you can see here is all the way on the right side of the chart is year to date 2024, and we had a lower high and a lower low, so the trend is down. Just no two ways about it. Here is a look, year by year, high, low, and average for the VIX. It looks familiar if you go back to 2017. It's not as low, but a very
Okay.
narrow range, and the average is down.
Okay.
Again, we have not had the VIX close above 20 so far this year. 2 years in relevant history, we've seen that before, 2005 and 2017. We'll talk a little more about what the back half could mean. Again, looking at streaks of VIX below 20, this does not stand out yet, at least, going back in history. We had a very quiet period, 94, 95, the middle of the aughts, leading into the GFC, and then 2017. Had a very long stretch. Will we get there again? Hard to know. Plus or minus 2% daily moves in the S&P. One so far this year.
Wow.
And that was an up day. Now, intraday, we've had some plus or minus 2, but on a close-to-close basis, we've only had one day that was more than a 2% move, and that was a 2% upside. So, it's just quiet. My other streak chart, streaks of S&P without a 2% daily move. If you cut off the left half of this chart, we're closing in on the 2017 streak.
Yeah.
But, in fairness, if you go back, we can see this happen for a very long time. 900 days back, 04, 05, 06, 07. That was crazy. But we've gone 336 trading days without a close down more than 2%. Realized volatility mirrors implied volatility. No surprise. If you don't have any realized volatility, it's hard for VIX to get up off the floor. And, again, we're a little higher in terms of the range than we were in 2017, but again, very narrow, and it's been going down since 2022. Looking at the volatility term structure using the SIBO constant maturity, 9-day, 30-day, 3-month, 6-month, 1 year, we had one little scare in April when we had that pullback. But right now, this is contango from front to back and pretty dang steep, and below the trailing 12-month average. So, people are not concerned at the moment. One of the other things I look at is, when the S&P moves, what does VIX do? And how much does it move? Because we're accustomed to seeing, meaningful, and this is VIX in points, because as people should understand, VIX is a percentage. So I prefer to look at VIX in points rather than percentage moves. So this is VIX point moves per 1% down or up in the S&P. And the most interesting thing here is that the red one is what does the VIX do when the S&P goes up the equivalent of 1%. And it's very muted this year. The VIX does not want to go down. It has settled into a range and just doesn't seem to want to move. Does that mean that it's, poised to explode to the upside? Could be, but suffice to say that it's been unresponsive to the S&P continuing to go higher.
Hey, let me ask you this then, Jim. Has it been more difficult to be selling vol? Because it hasn't given up as much on up days? Doesn't offer as much potential being a writer?
It has been a little more challenging. We've had some spurts. If you sold vol on the April low, you did well. But it's been very choppy.
Yeah.
Even with the curve in steep contango, it has been, the moves have been muted.
Okay.
Looking at the VIX futures, and here what I do, and people who follow me can appreciate this. When you look at the VIX futures, you have to recognize that they're rolling, they're moving every day. Every contract is moving one day closer to expiration. So what I do, and what, a lot of people in the VIX world do, is look at a constant maturity taking the 2 front months and coming up with what's essentially a 30-day constant maturity VIX future measure. And again, this year, what do we see? We see the same story, echoes of 2017. Very narrow range, average coming down. So the VIX premium is pretty narrow.
You know what's amazing? In 2017, we didn't have 2 wars on the in the globe, and it's the same. Even in the face of geopolitical risk, that people are just completely, whistling past the graveyard.
It is, yeah,
Isn't it something?
It is very, very interesting. You would expect that there would at least be more of a range in here, right? You would expect that that we'd get some jumps, but we really just haven't. And yes, and you can conjure up a narrative that says we're getting all wound up. People are looking back at 2017 and saying, hey, are we setting up for another Volmageddon, the February 2018 explosion?
Oh, yeah, I remember that.
And we can talk about, why that happened in 2018 and why it might be different this time. But, we'll only know in hindsight.
Yeah. It's just amazing to me.
Yeah. Again, with the VIX futures. So, how often have they been in contango versus backwardation? And here, what I'm saying is backwardation is if the front month is above the second month.
Right.
And, so far this year, we've had what?
None.
2 days in backwardation in April.
Yeah.
So, it's just nobody cares. Nobody's worried.
Yeah.
So here's a picture of that term structure currently, right? July's the front month, August, September. What the hell is this bump in October? Well, it's the election. So if people are concerned, they're showing some concern for the election. And I get asked the question, but Jim, that's the October VIX futures contract. The election's in November. Well, the October contract will expire on October 16th at a price equal to spot VIX. Spot VIX is a forward-looking measure. So on October 16th, spot VIX is going to measure implied volatility for the next 30 days, and that will include the November election. So the October futures contract actually covers the election, and that's confusing to some people, and I don't blame them.
Yeah.
But that's why the hump is in October.
And still projecting under 20.
Still projecting under 20, which is wild. Really and it has been dropping and dropping and dropping. The term structure has just been, stair-stepping down all year.
Well, that's because my sister has it figured out. She's going to get out of the market in October and then get back in after the election, and she's going to have it perfectly timed. And she's John Q. Public, so I think a lot of people are thinking they could just ride the market until the fall and get out before the election, just re-enter after the election. Now, if it's that pat, Jim, I'm going to just throw away all my charts.
Well,
if amateurs can get that right.
I'm on record having said that the October contract price is wrong, but I don't know which direction.
Okay.
Right? Because,
all right.
If do we have a contested election? Do we have,
martial
another
law?
Yeah. Do we have chaos and massive disruption?
Unrest. Yeah.
I don't know. Or do we somehow pass through this relatively peacefully, in which case, if all hell breaks loose, 1855 is cheap.
Right.
And if there's a relatively calm transfer of power, assuming
Should
well,
be 12.
if there's a transfer of power,
Yeah, there
um,
you go. If there is.
yeah, I don't know who's going to win. I mean, the betting markets are all saying Trump's going to win. We'll
Yeah.
find out.
Yeah.
The price is wrong. I just don't know which direction.
Okay.
So so you know,
So that
uh,
kind of fits with
so
it.
so
My sister, like it's too pat.
yeah,
The number is just too pat at 1855.
right.
Yeah, because it's not extreme either way, really.
So
It's
there's an option trade in there somewhere, but I'm not your guy.
okay, Jim. You are my guy. All right.
Now, being the volatility nerd that I am, I also look at uh, volley, which is at the money implied volatility. Uh, some people, and I'll come back to it, but VIX measures option prices, for a strip from out of the money on the downside to out of the money on the upside, and comes up with a value for VIX. What Scott Nations said a bunch of years ago was, tell me what at the money volatility looks like, because I don't know what to do with puts and calls that are 5 delta and trade by appointment only, but they're included in the price of this VIX thing. Interestingly, volley tells the same story. Narrow range, average coming down, and looks more like 2017 than anything else. Now, one of the reasons I like to look at volley is because I can then look at the spread between VIX, which is broad strip of options, and volley, which is only at the money options, and it's a measure of skew, right? Because if they're exactly the same, then that says that all of the weight in VIX is at the money. And to the extent that VIX deviates from volley, it's a reflection of those out of the money options influencing the value for VIX. The narrow range says that investors aren't paying too much attention to at least deep out of the money index options. Because this spread, again, like everything, if there's a theme here, narrow range headed south. And we're seeing that again here. And I'll give you a visual of it. This is what I call the fear spread. And these things are moving relatively in lockstep. And the fear spread, is just stuck in the twos. Nobody seems to be very concerned at all. Another way to look at it is demand for tail protection. And again, my friend Scott Nation says, let's look at 3 standard deviation out of the money put options. If there's a bid for 3 standard deviation out of the money put options, then somebody thinks something bad's going to happen. And guess what? There really is not any bid right now. Nobody with the S&P, at near, all-time highs on a given day. Nobody is worried about it.
Yep.
Dispersion.
All
my
right.
God. Andy Constant and Ben Hunt, this one's for you.
Okay.
So dispersion trading, is something that's all the buzz. All the smart kids are talking about, all the pod shops trading dispersion, which is basically looking at the difference between the volatility of individual stocks and then the index, and there are actually 2 ways to play it, right? You could be short index vol and long constituent vol, or you can be short constituent vol and long index vol. There's a trade there. It's a trade that's been around for quite a while, but it seems to have garnered a lot of attention. And so our friends at SIBO actually said, hey, let's create an index for that. So they did. And it's kind of interesting to look at the data and see, 2 distinct deviations from the norm The first one being Volmageddon, where dispersion went to zero. There was no
Yeah,
dispersion. Everything went the same direction. And
yeah,
interestingly, in COVID, you actually had a spike in dispersion because people decided, that there were some things that they wanted to bid up, Peloton, Zoom, whatever,
right.
uh, and so there was dispersion between the constituents and the index. Right now, so what we've seen over the last several years is we've seen an above average level of dispersion, which suggests that, there are individual equities in these indices that, are more interesting than the index itself. And so,
Like Nvidia, like a lot of
exactly,
these. Okay, got it.
exactly. And
So
and the
they'd be
volatility of
what?
those.
They belong Nvidia and short the general market. That's a dispersion trade.
That's a simple example of a dispersion trade. Yeah. And
Okay,
typically, they're picking a basket of constituents that they're long
yeah,
and short the index against that. And that's
got it.
fine as long as, particularly, with VIX at low levels, that's a wonderful trade. Okay.
Okay, it won't be with VIX at higher levels. In other words,
If VIX were to jump a
because
lot higher, then that trade looks a lot worse. And one of the concerns is, gee, you got all these smart guys out doing this dispersion trade. We have no idea. If we go back to February 2018, it was the concentration of assets in some exchange traded funds that had to rebalance every day, and the short volatility funds and the levered long volatility funds had to rebalance in the same direction every day. The short funds had to buy to cover, and the long funds had to buy to maintain their leverage. And that got to a point where it basically just massively disrupted the VIX futures market on what was a relatively mild pullback in the S&P. We don't see that in the volatility landscape today with the exchange traded products that we have today. What people are concerned about is, gee, under the surface, we think we've got all these guys, whether it's Millennium, Balyasny, Citadel, whoever the hell it is, we've got some unknown number of people that have this dispersion trade on all in the same direction. And if it unwinds, it could create a blow up.
okay.
You know, I don't know. I haven't found
Because when
anybody
you have
who,
high vol, they throw the baby out with the bathwater, right? So there wouldn't be as much dispersion.
well,
Everything might.
yeah.
Is that
Well,
true?
you'd have to reset, and you might want to flip the direction of your dispersion trade. But
Okay.
the concern that people have is that if you have a bunch of people in basically the same trade, and the market starts to move against it, and the risk management guy taps you on the shoulder and says, "Hey, Dale, you got to close out your position." And if that happens 300 times
Yeah.
across the street at different places, that unwind could create some violence.
Got it.
Um, it's really hard to know, how much of it is out there, who has it, what they're betting on. So we'll just have to wait and see.
Yeah. We'll find out.
Yeah. So another way, kind of the flip side of that dispersion measurement, is looking at correlation. Is everything highly correlated or low correlation? And so SIBO, again, in their great generosity, has given us 1 month correlation, 3 month correlation, and those are as low as we've ever seen them. And so, stocks are moving independently. We have a target rich environment for stock pickers and dispersion traders. and it makes people nervous because, as you can see, going back again to Volmageddon, going back to COVID, going back even in 2016, that was the Brexit decision. You can have these spikes in correlation that are associated with bad things in the market. So, having implied correlation this low makes people nervous that, something's going to happen. But the flip side is VIX is in the basement. There's no bid for tail hedges. So, if people are nervous, they're not expressing it in the ways that we would normally expect them to do.
They're not putting money on their nervousness because hedging
Exactly.
is well, don't you know, Jim, that hedging is a waste of money? And
Um,
and if you come out of something because there's sector rotation, you can't go to cash or you get a red card. It's illegal. You have to go into another sector.
you're not wrong.
Yeah. Okay.
Let's not forget about the bond market. You guys were talking about TLT.
Yeah. Looks pretty good.
What's interesting here is that it's no surprise that when the Fed started to raise interest rates, bond market volatility started to move north. Unlike equity market volatility, which has come back down. There were a few minutes there in 2022 where equity and bond market volatility were both moving a little higher. Equity volatility has obviously come back down to lows. Bond market volatility, continues to stay at elevated levels. People are still.
Tell you,
well,
people are still nervous and bearish of bonds.
Well, they're certainly nervous, and so
They have more confidence in stocks than bonds.
Well, and you can see it even if you just look at things like TLT, right? The moves in TLT, are anything but smooth and measured. When it moves, it's been moving harder than you might expect it to.
Okay.
And so what we've seen, unlike what we saw in the equity volatility measures, even though the range this year for move, has shrunk down and the average has dropped, it's still, significantly higher than we saw it, right, from 2012 to 2021.
Right.
So we're definitely in a higher vol environment for bonds. Okay. So what the heck? Will equity markets continue their bull run? Will strength remain concentrated? Can it broaden out? Will the Fed ever cut interest rates? Will the dispersion trade unwind and push volatility higher? What's going on in Europe? Are there broader implications for what's happening in the elections? Who are we going to elect come November? And will equity market volatility and implied correlation remain subdued? You asked me a question. What do I think about the back half? It's hard for me to believe that the back half can be as quiet as the front half has been. But that would be the pain trade.
Right.
The pain trade would be that the bears, who are there any bears left? First of all, and if there are bears left, do they get carried out because all of this stuff just kind of settles itself without any violence? We shall see.
I think they're out there looking for picnic baskets. Yogi and Boo Boo are in Yellowstone looking for picnic baskets, and I think they're going to steal a few before they go back into hibernation.
I love it. There's another TV metaphor that you and I appreciate, and I don't know if Blake's old enough to remember Yogi and Boo Boo.
Yeah, they, they're the reasons. They're the main reason why I learned to play the short side of the market.
There you go.
Anyway, Jim, another great presentation. I think that people could learn a lot about VIX, and it's kind of like you know, mystical science to most people. But really appreciate you breaking it down for, you know, a layman like me to be able to understand what's going on. And hang in there. You know, things aren't going to be calm forever. I just don't see it. I just don't see it, Jim. So I know I've been saying that for years, and we have had some interruptions, but um, you know, we're in a melt up. You never know how long a rubber band can stretch, but it's stretched, and
Yeah,
we'll see what.
yeah, Dale, the analogy is, we've seen this movie before.
Yeah,
We're not sure how it ends. And, these days, with Oppenheimer 3 hours long or whatever,
yeah, yeah.
we don't know, we know how the movie ends, but we don't know how long it is. And they just seem to keep getting longer.
Great metaphor. Yeah. So everything's okay until it isn't.
There
And
you go.
really appreciate a veteran like you, the new firm that you're with. They're fortunate to have a guy like you, Jim. I'm a fan.
Well, thank you. I
Jim
appreciate it,
Carroll,
Coach.
everybody. And follow him on X at Vixologist, and check out his firm if you're a real rich guy. They have some talent. They have some talent managing money, and appreciate you being here through the years and talking about a subject that's not easy to put a 30-minute presentation together because it's been so static. So again, Jim, uh, appreciate it, my trading warrior brother, and talk to you late summer, early fall. We'll see what's happening
Outstanding.
then.
Yes, sir.
All right, Jim Carroll, everybody.
As
Follow
the
him.
kids, as the kids say, peace out.
Peace out, bro. Jim Carroll, everyone. And that's it for Turnaround Tuesday, everyone. Good hunting. Good join the team in 10 minutes on the morning edge. I'll see you tomorrow. Don't just count your dispersion trades, count your blessings. Adios. Thanks, Jim.
You bet.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.